The top business stories live from the Sky News City studio. US employment growth is higher than expected for December, dampening market hopes of an early interest rate cut. New car sales accelerate in 2023, but electric vehicle share of the market falls for the first time. Plus, shares of the FTSE 100 gold miner Endeavour Mining fall by nearly 7% as its chief executive is sacked for serious misconduct. Good afternoon. This is Business Live with me, Ian King. We begin this afternoon with the closely watched employment figures from the United States. And the latest non-farm payroll data shows that employers hired more workers in December than was expected, dampening market expectations that the Federal Reserve will cut interest rates early in the new year. Well, some 216,000 workers were hired in December. That was way more than the 171,000 that had been expected. Meanwhile, the figure for November has been revised lower, increasing by 173,000 instead of 199,000 as was initially reported. Well, the US unemployment rate stayed unchanged in December at 3.7%. Well, joining me now to talk about this from New York is Mickey Levy, visiting scholar at the Hoover Institution at Stanford University and a member of the Shadow Open Market Committee. Mickey, great to see you this afternoon. I mean, the headline number is very, very strong, but if you look at the three-month average, given the downgrades for October and November, there are hints that the labour market is softening.
Well, it may be softening, but it's very firm, and it's just consistent with the economy growing at a continued healthy pace. And a key point I would bring out is the reason why employment's rising is businesses need to hire to meet product demand. So you have this very nice confluence of increasing consumer spending that's driving demand, that's increasing employment, and it's a very, very nice pattern the U.S. is in. And so you could use the word resilience if you want, but you can also use the term just outright healthy economic growth.
Well, I guess to your point, Mickey, I mean, it is interesting to see that on a year-on-year basis, wages are rising still pretty strongly and at a faster lick than they were the previous month.
Well, that's right. And keep in mind, with the recent reduction in inflation, particularly driven by energy prices, that boosts real wages and boosts real purchasing power. So the U.S., the holiday retail sales season looked to be fairly healthy, and we should see continuity going into the first quarter of 2024. So all looks pretty good. And what I'd like to point out is it's not just jobs and disposable income that's driving spending. You also have in the U.S. continued increases in household net worth to a record-breaking level. And this is increasing the propensity to spend out of disposable income.
You mean the fact that stock markets rose so much in 2023, that it's a kind of virtuous circle almost?
It's not just the stock market, it's also home values. And this just makes people more confident. And so household net worth through the third quarter was an astounding $151 trillion, and that's net of all debt. So that's 7.75 times as high as the flow of disposable income. And it's just increasing confidence in the propensity to spend. And so that increase in spending is leading businesses to hire.
I mean, it really does prove, Mickey, I guess, that one writes off the US consumer at one's peril. But I mean, I guess the flip side of that is the Fed is going to be in no rush to cut interest rates.
Well, I think you're exactly right, and I liked your headline in that the markets had gotten a little ahead of themselves in expecting rate cuts right away. Now, here's the situation the Fed faces. Inflation is coming down, and by inflation coming down, that is increasing the inflation-adjusted federal funds rate. And so it will be lowering rates this year in 2024 to adjust monetary policy so it doesn't become inadvertently too tight as real rates rise. However, we shouldn't expect the Fed to cut rates anytime soon. I think you could look mid-year, it would be a natural point, but earlier than that, I wouldn't expect it.
Is there a danger, though, Mickey, with that, I mean, the Fed will face the risk, won't it, of being politicised if it cuts rates too close to the presidential election? I mean, Donald Trump will have a field day with that.
Well, now you're right. The Fed always tries to lie low during presidential election years, and if you look through history, with one exception, that is 1972, when Arthur Burns, who was chair of the Fed, conspired with President Nixon toward his reelection and skewed monetary policy. In every other year, you see the Fed lying low and adjusting its interest rates to real economic data, the unemployment rate, and inflation in the same way as in on a non-election year. So what you could expect this year is the Fed's going to play it low key. If and as the economy slows and inflation comes down a bit, they'll lower rates, but ever so gradually. But their goal, the Fed's goal, is to orchestrate a soft landing and not draw any attention during this very rancorous political election season.
To that end, Mickey, is it possible that you might see the Fed doing more on QT, quantitative tightening, rather than outright interest rate cuts?
Well, I would like to see that happen. The Fed, is unwinding its balance sheet ever so gradually. It's unwinding it faster on treasuries than MBS. The Fed shouldn't be holding any MBS with the strength in the housing market, which is continuing to benefit housing. And I wish it would, but wishful thinking that the Fed becomes more aggressive in unwinding its balance sheet.
In the meantime, I mean, from what you've just said, Mickey, I mean, all of this is incredibly positive potentially for earnings for US banks.
Well, not just earnings for banks, but if you think about the prospects for continued economic growth, even if the rate of growth slows a lot, it's very positive for analysts' expectations about corporate profits in a wide array of industries, particularly banks and financials, but in a wide array of industries. Once again, if analysts and financial market participants anticipate continued economic growth, then they'll put a multiplier on corporate profits. And I think one of the key stories in 2023 is a year ago, people were forecasting recession. As the economy showed more and more resilience, the markets became more optimistic that the resilience would lead to a soft landing, and that's what lifted the stock market. And that's a very nice positive. So even if the economy remains healthy and bond yields actually back up a bit, that would be offset by increased enthusiasm about the corporate profits outlook and support the stock market.
I know I'm making you a hostage to fortune here, Mickey, but can one say definitively now that the US is going to avoid a recession?
No, I think it's too early. While banks are well capitalized, they still are. A lot of banks are underwater on their treasury portfolios since they bought when bond yields were lower. Regional banks face very large exposure to commercial real estate that is still reeling. So it's too early. So we have to be data driven right now, but things really do look more and more promising. And I would say the highest probability is we either have a soft landing with some moderation in growth, or even if we had a recession, it would be so mild with fractional decline that you really wouldn't be able to distinguish the difference between that and a soft landing. And if businesses put the same probabilities on that scenario, then they're not going to slash employment and do anything that would be jarring to the economy. So things are looking pretty good now.
All right, an optimistic note on which to end. Mickey, we haven't had you on the programme for a while. It's lovely to see you again. Thanks very much for joining me.
Thank you.
The UK new car market enjoyed its best year in 2023 since the pandemic, according to figures published today. But the share of the market accounted for by electric vehicles has fallen for the first time. The Society of Motor Manufacturers and Traders said new car registrations reached 1.903 million in 2023. That was up 18% on 2022. Within that, the number of electric vehicles sold reached a record 315,000, also up 18%. But the proportion of the market accounted for by electric vehicles slipped from 16.6% in 2022 to 16.5%. The UK's best-selling cars during the year were the Ford Puma, the Nissan Qashqai and the Vauxhall Corsa. Some other business news stories for you now. And the FTSE 100 gold miner Endeavour Mining has sacked its chief executive for serious misconduct. Sébastien de Montessus was dismissed following an investigation into an irregular payment instruction of $5.9 million issued by him in relation to an asset sale by the company. Endeavour said that separately, its board had been investigating its former CEO's personal conduct with colleagues after allegations were made against him through the company's confidential whistleblowing channel. Shares of Endeavour Mining fell by more than 10% earlier today. They finished off by just under 7% lower. The pub and bar operator Revolution Bars said today it will close 8 of its least profitable bars following a review of its estate, including sites in Derby, Liverpool, Southampton and Reading. It blamed the closures, which will leave it with 58 bars and 22 pubs, on a continued challenging trading environment and the likely impact of the 10.8% increase in the national living wage in April this year. Well, the news came despite Revolution reporting its best Christmas since before the pandemic. Its like-for-like sales, that's the measure, of course, that strips out the impact of new openings during the 4 weeks to New Year's Eve, were up 9% on the same period in 2022. Shares of Revolution have fallen by as much as 22% today. And average house prices in December recorded their first year-on-year increase for 8 months, according to Halifax. The UK's biggest mortgage lender said house prices last month were up 1.7% on December 2022. On a month-on-month basis, they were up 1.1% on November, which was the third monthly rise in a row. There were big regional variations, however. Northern Ireland saw prices rise by 4.1% year-on-year, but the southeast of England saw prices fall by 4.5% year-on-year. Halifax said it expects house prices this year to fall by between 2 and 4%. Still to come here on Business Live. What a week it's been, the first week of the new year. We'll tell you how the markets have finished up after this short break. Don't go away.
950 pages of documents were unsealed. So this is not the entire tranche of documents we're going to expect. So there might be more names to come out. But in these 950 documents, there is certainly a lot to talk about. As you mentioned, President Bill Clinton is mentioned in a number of times. So these documents are mostly depositions from the defamation case brought by Virginia Giuffre against Ghislaine Maxwell back in 2015. So in these depositions, we hear many, many mentions of President Bill Clinton, including an acknowledgement by Ghislaine Maxwell that he had a meal on Jeffrey Epstein's plane. One of the things that's very contentious is whether or not Bill Clinton ever went to Jeffrey Epstein's island. He has denied this. He has admitted to meeting Jeffrey Epstein in other places, but he says he never went to the island. So that's something that these documents shed a little bit of light on. And we've got a number of other high-profile people named in here.
Including Prince Andrew,
including Prince Andrew, of course. So there's a number of references to Prince Andrew. Obviously, you know, we're all following the case when Virginia sued Prince Andrew himself. We know that he's denied these allegations and settled that lawsuit. But there are a number of mentions of him. There's a victim. We did already know this, but we've now seen it in sworn testimony. There's another victim who said that Prince Andrew groped her while in one of Jeffrey Epstein's homes. So that had been previously reported, but to see it in sworn testimony is very, very interesting and will raise questions for Prince Andrew, I'm sure.
I just took a shower above the clouds. You know why? Because this is the Emirates A380. Fly Emirates, fly better.
Well, the US dollar has slipped slightly on the back of the non-farm payroll data, having earlier hit a three-week high against a basket of currencies. The pound has finished up nearly half, well, it's trading half of 1% higher right now against the greenback. It's also up a quarter of 1% against the euro. The single currency, meanwhile, is a sixth of 1% higher against the dollar. On the equity markets, well, European stocks have finished largely in negative territory and in doing so chalked up their first weekly loss in 8. Talking points this afternoon include the French spirits groups Rémy Cointreau and Pernod Ricard. Those are off by 7% and 3% respectively after China launched an anti-dumping investigation on EU brandy exports. Meanwhile, the container shipping giant Maersk, we've talked a lot about that company this week. Its shares off half of 1% in Copenhagen after confirming it's diverting all vessels from Red Sea routes around the Cape of Good Hope in South Africa for the foreseeable future. Well, here in London, the FTSE 100 has clawed back some of its earlier losses, but it's nonetheless finished down nearly two-fifths of 1%. Endeavour Mining, you won't be surprised to learn, is the leading blue chip faller, while Airtel Africa is off another 2.5% and remains under a cloud following the unexpected news earlier this week that its CEO is stepping down, very highly regarded. You might recall we've had him on this programme in the recent past. To the upside, WPP up by 3.75%. That's after my colleague Mark Kleinman reported it's looking to sell its Kantar Media division. Outside the FTSE 100, the shipping services group Clarkson has finished more than 6.5% higher following an upbeat trading statement. But TUI, the tour operator, is off by nearly 2.75% as investors digest news it is proposing to delist from the London Stock Exchange. Over on Wall Street, well, stocks are higher on the non-farm payroll data, but they are still in line to close the first week of 2024 with losses. Talking points this afternoon stateside include Peloton, which is currently ahead some 15%. That is on news of a partnership with TikTok. Meanwhile, the oil price has edged higher and is on course for its third weekly gain in 4. A barrel of Brent crude will currently set you back $78.85 a barrel. That's up just over 1.5% on the day. Well, joining me now is Rachel Winter, partner, of course, at Gillikin & Co. Rachel, Happy New Year to you.
Thank you very much.
A lot of data to digest today. I mean, we talked a lot about the non-farm payrolls earlier in the company. We always had some construction PMI data here.
We have. So these PMIs, they're a survey that asks supply chain managers whether they think their industry is expanding or contracting. We come out with a number that's either above or below 50. A number above 50 means expansion. A number below 50 means contraction. The latest construction PMIs came out at 46.8, so quite a way below 50. That means contraction, but they are higher than they were last month. So we are on an upward trend. If we look a bit deeper at the data, house building in the UK was the weakest part of that construction data. And I think that really shows that house builders are unwilling to build houses at the moment because the demand isn't there. And that's because mortgages are relatively expensive at the moment. But if they start to come down over the next few months, we might get to see a bit more demand. Well,
this is it. I mean, we saw the mortgage approvals data yesterday. I mean, it doesn't take much to get mortgage demand ticking up again.
No, it doesn't. Yeah. No, I think a lot of confidence has returned. I mean, if we go back to last October, around about the time of the mini budget, there was a time when a mortgage was costing around about 7%. It's now come down a lot. You can now get a 2-year fix for not much above 5%. So I think people are feeling more confident, and I would expect to see more demand for houses this year.
It's very interesting, isn't it? Now, on the corporate side, I mean, not a lot of news around today, but Clarkson's caught your eye.
Yeah, Friday's always a quiet day, but we have had this trading update from Clarkson's, which is a shipbroking firm. A very, very brief update. I think it was 2 sentences in total, but they have said they expect their profit to be ahead of current expectations. The reason for that is we've got a lot of ships having to be diverted away from the Red Sea. That means they're having to take much longer journeys. I expect there's been a lot of work for Clarksons to do, and therefore they are going to be doing more business and making more profits at the moment.
Yeah, now, across the other side of the Atlantic, we heard today from Constellation Brands, big booze company.
Yeah, so they are a big American company. About 3/4 of their revenues come from beer. As of last May, they do make the most popular beer in the US, which is Modelo. That overtook Bud Light last year. Results today in the beer section were good, so they have seen some growth there. They do also make premium spirits and wines, and they have seen a bit of weakness there. But that does seem to be in keeping with what we're seeing across the rest of the sector. I don't think it's company specific. Perhaps people are starting to trade down a bit because the cost of living crisis is still ongoing to some extent.
Well, yeah, I mean, we've seen that with the recent trading updates from Diageo. People do seem to be sort of trading down a bit in the alcoholic drinks category.
They do. I mean, inflation is still high. I think some people are still struggling a bit, so it's not surprising that people are perhaps looking for some cheaper options.
To what extent is a company like Constellation a barometer of US consumer spending?
I think certain parts of it will be. So I think by looking at the spend on beer versus the more expensive products, we can get a feel for how confident people are feeling. So if they are willing to spend more on the premium brands, then perhaps that suggests that people are feeling confident. If they are spending more on the cheaper brands, then perhaps that is a sign of a lack of confidence.
Well, as I mentioned in the market summary there, Wall Street higher this afternoon, but it's nonetheless had a pretty lousy week. Is that to be expected? Because, I mean, the market went gangbusters for the last 5 or 6 weeks of last year.
Oh, it did. I mean, the Nasdaq Composite was up about 40% last year. So I think if we put this week's small decline into context, you know, I think it still had a really good few months. So I personally don't feel worried at all. The reason for the decline is that perhaps interest rates might not go down as soon as people were hoping, but I do still think they will go down this year. So it's just going to be a case of waiting a bit longer than we might previously have had to.
I mean, that's it. I mean, all the commentary I've read seems to be saying, oh, this is just a realignment of interest rate expectations. I mean, could it be that there's a bit of good old-fashioned profit-taking going on as well?
Oh, totally. I think some people who were in the market last year will have made a lot of money, particularly those who are invested in the big tech stocks, the Magnificent Seven. Yeah. So certainly there will be some profit-taking going on.
I mean, looking further afield, what are you expecting to see from the Q4 earnings season when we get the numbers?
Well, I think the last few earnings seasons have been ahead of expectations. I think over the last few months, we have seen inflation coming down in both the UK and the US. That means company inputs will have been coming down as well. And therefore, I do expect us to see some good company results.
Would that apply to the UK and the Eurozone as well, or just the United States?
I think both. I think we have made good progress with inflation in both the UK and the US and the Eurozone as well. So Eurozone inflation came out today. It was 2.9%. So way below where it was at the end of last year, and I think that will be benefiting many companies as well.
It's a nightmare for the European Central Bank. I mean, I was looking at the French inflation print yesterday. It's north of 4% still. How do you juggle that if you're the ECB?
Yeah, very difficult. And I think the temptation is just to look at perhaps Germany and France, which are the biggest two economies. But as I said, the overall inflation across the Eurozone has come in at 2.9%. So not a bad number considering where we were last year. Yeah,
the Euro's still a bit in the doldrums, isn't it, on the FX markets?
It is, yeah, still a little bit weak. That's still because interest rates in the Eurozone are lower than where they are in the UK and the US, and that makes the currency less attractive. So it is going to be a bit weaker than the pound and the dollar.
All right, Rachel, got to leave it there. Great to have you in the studio this afternoon. Thank you. Well, that's it from me. I'm back again with Business Live on the Monday morning at 11:30. Do hope you can join me for that. In the meantime, don't forget, Sky News has launched its new daily money blog online and on the Sky News app. If you scan the QR code on the screen right now, you can see news on tax changes in 2024, and you can work out how your take-home pay will change from tomorrow using our national insurance calculator. So I say, do have a look at that if you can. There's also an article by me. Can't remember what today's one is. I've been doing quite a few lately. By the way, just before I go, I should tell you, in the last couple of minutes, the Labour leader, Sir Keir Starmer, has tweeted on the weather. He says, "My heart goes out to everyone devastated by the floods. I thank the emergency services for their tireless work. Labour's Flood Resilience Task Force will make sure flood defences are in the right places and fit for purpose. People's lives shouldn't be upended by the extreme rain." More on that next on the News Hour with Jonathan Samuels. Thanks for joining me tonight. Cheerio.